Let's go to our market panel. We have Evan Faber. He's Cambria Investment Management Chief Investment Officer, and Mark Martiak. He is Premier Wealth First Allied Secures Senior Wealth Strategist. Good to see you both, gentlemen. Mark, first to you. The news from Dell, is that specific to Dell, or does that say something larger about the high-tech, specifically the PC industry?
I think it says something specific about the PC industry, but let's not forget that Dell is in a unique position right now as the company begins to obviously foster what needs to happen to take them private. So, but I do think we need to keep our eye on the industry sector as a whole, because let's not forget also that Dell is a market leader in that segment.
Okay, let me get to Meb, and we're looking at your outlook. You are overweight certain areas because you obviously feel that there's still an opportunity and a way to make money. What's your macro picture right now?
We're bullish across most asset classes, especially equities. U.S. stocks have a pretty small allocation for us, mainly due to valuations, but we think there's a lot of opportunity in foreign markets, especially beating down Europe, but also markets like Russia, Greece, and even Argentina.
Meb, by the way, you wrote a book called The Ivy Portfolio. I'm wondering if this sort of mimics what Harvard and Yale is doing. But you also are big in high-yield bonds. You've got about 20% of your portfolio in high-yield bonds. Give us some examples, because we always hear about the high-yield bonds, but we don't have too many specifics about where to go there.
We think there's a lot of things that an investor could emulate or should about the endowments, one of which is a high equity focus, a big exposure to real assets, so briefly commodities as well as real estate, which we have high exposure to.
High-yield bonds, and the others specifically.
And the other is high-yield bonds. And a lot of high-yield bonds have equity-like characteristics, so you don't want to necessarily put them in their own category. And a lot of the low-hanging fruit on high-yield bonds has been taken. They've had an amazing run last few years, so we think they're still attractive on a relative spread basis. On an absolute level, not as much, but we still have exposure to both high yield in U.S. as well as foreign.
Mark, it's your turn. You tell us where you see the money. Show us the money, and I know that you're a believer in the housing recovery. Let's talk about that.
I still believe in the housing sector and home builders, even though sentiment came out earlier today through out some indices, and it indicates that home builders may have some negative sentiment going forward. But I like financials, I like home builders, as I mentioned, I like energy, I like the metals, including gold and silver. It's a great time to buy them right now. I like copper, I like emerging markets, I like global mega caps. I think optimism rules here as far as equities goes, but at the same time, I do think you need to take a look at your fixed income portfolio and the allocations in each investor's portfolios, and take a risk-based approach to fixed income and diversify among that asset class as well.
Mark, would you go for specific emerging markets, or would you go for the funds, a collection of different ones?
I would do both. I would still look at Russia for energy. I'd look at China. I'd look at Brazil. I'd look at India. I'd look across the board at emerging markets first and foremost, and then the frontier markets as well. Some of those markets that you don't normally talk about.
Mark, Meb, great to see you. Thank you very much for your ideas.
Thanks, gentlemen.
Thank you for having me.